But at the end of the day, what I'm hoping is that you're going to walk away from here and going, actually, this has real value going forward.
Okay, so some of you may know me, some probably won't. I'm not as famous as Tom. Most of my work actually intentionally has to be behind, or I guess under the radar. A lot of my clients, I've probably signed more NDAs in the last 18 years than any other document in my life. But my clients typically are world's largest hedge funds, investment banks, commodities trading houses, many traders. If you read the financial press, you'll know of many. You won't know of many. The best traders don't like to be in the press. If they are, generally they've done something wrong, which is not good news. And what I try and do for my clients is help them to essentially make better decisions and to navigate the challenges of trading the markets, the highs and the lows. I've been doing that for 18 and a half years, working with traders all over the world, all different asset classes, 95% of the time thank you, is institutional, and then obviously got some good friends and colleagues like Tom, where I like to come and, if I get invited, to come and get my little slot to maybe share some advice and guidance. The one thing I always say when I'm working with anybody is there's no 7 steps, there's no 5 steps, there's no 3 magic qualities. That sells books, it gets people on courses, but it doesn't make anybody better at what they do. And the reason for that is because nobody in this room is like anybody else in this room. I say that, I was looking around for some twins, but that's the normal sticking point. I hadn't seen any earlier, so. But even they are not identical, even when they are identical. So we have to recognize that part of becoming a successful trader is shaping your own process. You've got to find out how to make it work for you. It won't be the same as for everybody else. And that's probably the most important piece of guidance I can give anybody is you start like everyone else does. You go on some courses. Sorry. No problem. No problem. It's fine. And then over time, you've got to work it out for yourself. But the key thing in working it out for yourself is work. You've got to do the work. There's no one I work with who's good at what they do, and by good I would say we're talking about people that are world class, who hasn't put in a large amount of work. Doing the analysis, doing the work at the screens, time at the screens, and also working on themselves. What I want to try and share today is just a few ideas, also some techniques that I utilize with my clients to help them really, I guess, to do what Tom's been trying to say is to close the gap between knowing and understanding what to do in any given moment and then being able to actually do that in some form. So we might call that consistency. So it's interesting for you to think about how consistent you might actually be with your own trading. So when you see opportunities set up that you should be taking, how many of them roughly do you take? If you should be taking them in a certain amount of risk on those trades, how often do you take the actual risk that your strategy suggests you should be taking? Exit, do you get out when you should be getting out? If you should be adding to your winners, are you adding to your winners? Are you able to stay out of the market when you shouldn't be in the market? That's also consistency. Inaction is action. Everything is action, everything is behavior. The thing also about consistency is we have to be careful with any of these ideas that we don't get too attached to it. Because the paradox is you need to be flexibly consistent. Because the market is made up, as is life, of many moments, some which are familiar and similar, but very few are identical. And so part of what I'm going to talk about today, and it ties in with what Tom's been talking about, Tom calls it situational, and in psychology we call it context, which is the situation a person is in. To understand behavior, we've got to understand the situation the person was in when they were doing the behavior. And we can only judge a behavior. In my brand of psychology, we don't talk about right, wrong, good, bad. We talk about, is it useful? Is it helpful? And if you think about in trading, for example, a very simple example, if you have a trending market versus a ranging market, it's quite likely the behaviors that we engage in might look quite different because the context of the market is different. And there can be different types of trends. And we might have different behaviors. So some flexibility is quite important, understanding the situation, the context, and what's required in that context. And what the best traders that I work with are very good at is what we call context sensitivity or market regime sensitivity. They understand the nuances of what's going on in the markets and how to adapt their behavior to maximize the opportunities in that context, or sometimes to stay out of the markets because they know it's not their particular regime where they've got strengths or opportunities. So when we think about how consistent we are, consistency is a nice word. It's what we call a mid-level term. We all kind of understand what it means. But consistency is going to be different. Over the course of a year, if we just did exactly the same thing all of the time, what we would call rigidity, we probably wouldn't maximize our market returns. Because not every behavior is going to work in every set of conditions. And we might choose to be rigid, knowing that over time, we win more than we lose, and when we win more than we lose when we lose. So we have a positive expectancy, so we may make that choice. But we might also want to have a bit of flexibility, recognizing different contexts and flexing and adapting to those different contexts. Now, all of us who have traded will realize that often if we look back and analyze our performance, we might get a gap between what our system might suggest we could return from the market and what we actually do return. And the reason for that gap is normally behavior, what we did in those moments. Okay, so all of you will have a behavioral gap. So it's interesting to think about, how big that gap might be for each of you. For some traders, it might be quite narrow. For some, it can be very wide. And also, we can start to think about, and what specific behaviors might it be that is creating my gap? Are there particular behaviors that I know I engage in which are reducing my returns from the market? So that's what we've got to kind of start with. And then we can think about, okay, and how would it be if I was more consistent? If I was able to do that behavior on a more consistent basis, what would the outcome be in my returns? And, of course, then what do I need to do about it? How can I start to change this behavior? Okay? Now, when I'm working with clients, we're often talking about trying to bridge the gap. All of my clients, like all of you, want to maximize market returns, fundamentally. That's a goal, whether it's in P&L terms or in other terms. Now, there are 4 building blocks we can think about in terms of where this gap might be coming from. The first one we have to think about is process. Because some people's behavioral gap is down to the fact they don't have a clearly defined process. For some people, the behavioral gap is also process related. They don't have any confidence in their process. They don't know if from moment to moment and or over time, that strategy has any kind of positive expectancy. They're diving off a diving board into a pool. They don't know how deep that pool is. For other people, and this links into the second point, they may have a strategy that's clear. It may have some positive expectancy, but it may not suit them as a person. So the strategy itself may work for some people, and it may be able to be clearly defined, but not all strategies work for all people. And if you have to trade out of line with your personality, that is difficult to sustain over time, and it's definitely difficult to do when there's stress and pressure, and we tend to revert back to type. So we want to make sure we've got a process, we understand the process, we want confidence, we want clarity, and then we want what we call congruence. We ideally want that strategy to be related to who we are as people. Some people are very risk-seeking by nature. They love novelty, they love discomfort, they want to get in, get involved, the bigger the better. And for other people, they're the exact opposite. They're very risk and uncertainty sensitive. They're cautious, they're careful, and I've got traders, world-class traders, who fit both of those categories. And when I look at their trading styles and how they make the money they make, it is very different. Both make exceptional sums of money in different ways, in different markets that suit them. And that's part of the working out how you become successful. You've got to do it your way. Then we get to this kind of the underlay, and I noticed, and I was interested to hear Tom talking about his, the sleep and diet. I've done lots of research with my clients around the physiology, the role of the body in risk-taking and decision-making, and it is very highly correlated. But we need to consider things like, our level of fatigue. If you're fatigued, you will make different decisions to when you're not fatigued. We all know that. I've got hundreds of bits of data to show it in trading scenarios. If you are highly stressed, it will affect how you perceive risk, how you make decisions, and the results you get. And your physiology will underpin your psychology. People who are sleep deprived are significantly more emotionally reactive than those who've slept well. So we have to think about the physiology. In performance, we have a phrase called bio-psycho-social. When we think about what drives performance, biological, psychological, and then social, i.e. often, like for my clients, we'll be working in a trading team, in an organization, what are the environmental influences? And then we've got the psychological piece. So maybe we've got a process, maybe it aligns to our personality, maybe we're looking after our physiology. We also need to think about the psychology, thoughts, emotions, where we're focused, so cognition, emotion, and all of these processes, and the part they're playing in this gap. So it's useful for you to be thinking about, as a framework, if you've got a gap, where is the gap coming from? Because I've sometimes had people come to me claiming some psychological challenge, and when we go back and we look at actually what's going on, it's a process challenge. If you don't believe in your process, if you've got no confidence in it, if it's not aligned to your personality, you can get lots of anxiety and stress and frustration and ill discipline, but it's not a psychology issue. It's a psychological reaction to poor process. So you can use this as just a bit of a self-assessment, assess the level of your process. You can think about, think about in life in general, how do you like to make decisions? I've got, he was a head of risk at a big hedge fund. I can say a little bit, but not too much. But we were doing some risk profiling. And he came out as adventurous in our kind of categorization, which is quite interesting for the head of risk in a hedge fund. But I often say to people, tell me about how you plan a holiday. Think about how you like to plan holidays. Here's what he does. He says, I pick an interesting country I've never been to before. I pick an interesting city that I can fly to in that country. I book a flight and I book one night's accommodation in the city that I'm going to arrive in. And then it unfolds from there. That isn't how I plan my holidays. I like to do plenty of research, take my time, plan, consider, look at alternatives, prices. It's a much more thoughtful, deliberate process. I don't want the risk of being in a bad hotel or being in an unsafe city or not knowing I'm going to be sleeping on day 2. That's uncomfortable for me. For him, that's what it's all about. The thought of spending months planning a holiday with minimal risk or excitement would be the worst thing for him. So we can think about in our lives, how do we like to make decisions as an insight into our risk personality? Does that align with how you're trying to trade? So we can do a bit of research. We can think about physiological. How are you managing sleep? Are you rested as can be before you trade? Eating, hydration, etc. But today we're going to focus particularly on the psychology piece, because that's what Tom's asked me to do. But I am always thinking about these 4 parts, because when people are making decisions and they're taking risk in the markets, it's these 4 things interplaying together. Yeah? We can't always assume it's one or the other. We need to kind of have the 4 pieces in our mind. So what we'll do today is we'll focus on the psychology. All of you that have traded and traded live, I think that's probably most of you know, it's pretty challenging trading live. It's not easy. And this is a piece, I'm going to read it because it might not be clear to everybody in the room, but this came from a podcast interview with Will England. He's the CEO and CIO of Walleye Capital. So he said, the job of being a PM, portfolio manager, whether you're quantitative or fundamental, is psychologically extremely toxic. Because you're going to be wrong basically just as much as you're going to be right. You're going to get kicked in the face a lot, and you're going to be someone who's the smartest person that they've known their entire life, and then they're going to just get beat up all the time. Now, I'll pause there, and this graph on the left-hand side is some data of high-performing fund managers collected by a company called Essentia Analytics. They collect data from a large number of funds. They analyze portfolio manager detail. And what it basically shows us, if you go across horizontally, we've got hit rate. So how often is the person right? And then we've got payoff ratio. So how much do you make when you are right versus how much you lose when you're wrong, going vertically. The most interesting thing, obviously, straight away is the fact, if we look at it, there is a very tight grouping. And that range of hit rate in this data is between 45 and 55%. So the best performing world-class fund manager in this group is right about 55% of the time. And other people in this group, also world-class, are only right 45% of the time. But obviously we can see that some, the big outperformers, make a lot of money when they're right and minimize losses when they're wrong. Yeah, it's what Tom was alluding to earlier. And that's the skill that we have to kind of work on. But becoming a top-performing portfolio manager, and then he goes on to say, takes a certain psychological profile, and that requires training. And I just don't think many humans are wired that way. Okay. And this goes back, and I think Tom uses a phrase in his book, about thinking differently. I think Mark Douglas, one of the first people probably to kind of bring that phrase about the best traders thinking differently to the rest. Lots of our human instincts, our biological responses are not the ones that are conducive to making money in the long term in financial markets. So we've got to be doing the work on our strategies, we've got to do the work on our skills, and we've got to do the work on ourselves. Yeah? The good news is we can rewire. So if we're not wired correctly, we can rewire. One of my favorite examples of this is, so what he's really saying here is, psychologically, trading is tough. Most of us probably go, yeah, that's probably true. But actually, then if we go to Navy SEALs, we go, okay, well, actually, Navy SEAL selection is also really tough. And what Navy SEALs select for initially, particularly, is fitness. A large part of selection is about how physically fit you are. A large part of trading might be about process. But to get to the end of selection, what they realized was, and this is true in all special operations, it's not just physical. And a large proportion of it is actually mental. And in trading, we may think it's all about having a great process, but it's not. It's also largely mental, psychological. And so when the SEALs realized that they were losing people based on physical testing, but who with different psychological skills might have got through those tests, they were faced with a choice. Either we keep things as they are, or we do something different. We start teaching Navy SEALs psychological skills to enable them to pass the physical tests so we get a higher output of candidate per selection group. And that's what they did. They identified the skills that were required, and then they taught them. People learned them, and selection rates went higher without any fall in quality of candidate. And we can use the same thing in trading. If we know that it's psychologically toxic, difficult, challenging, we can use our own language. The question is it possible to learn the skills required? and to rewire? And the answer is yes, it is. If we are willing to do the work to do the rewiring, of course. And a large part of my work when I'm working with clients is helping them to understand more about themselves and kind of those 4 component pieces and where we can improve and optimize. But when it gets into the psychology piece, often we're trying to identify, what can we do differently? How do we need to think differently? Or how do we need to respond differently to when you're having those emotions whilst you're trading? And I want to kind of share a few thoughts and ideas around that in our session today. So a large part of my work over the last probably 10 years has been helping traders to develop something called psychological flexibility. And I've picked this particularly because I think it overlays really nicely with what Tom's talking about today. So the definition, again, just so I know a few of you might find it hard to read the screen, people's ability to focus on their current situation, what's happening in the markets as I see them right now. And then based upon the opportunities afforded by that situation, take appropriate action. So do the right thing for the situation you are in, even in the presence of challenging or unwanted psychological events. The reality of trading is quite often you may have to take action even though you're feeling some doubt or you're a bit anxious or you've got a slight sense of a fear of losing on that trade. And I was chatting to somebody before the session, and something I think is worth sharing is, I think a lot of people in their mind, and maybe it's how some of the early books were written, or maybe it's just popular culture, there's almost an expectation, even in my institutional clients, that at some point in their career, they will get to a point where suddenly they're trading without fear. There's no anxiety, there's no stress, there's no worry. They're confident all the time. It comes naturally and easily. And it's almost like there's a hope that there's this point in the future when that will happen. And what happens, it doesn't happen. And some of my clients have been in the markets for 25, 30 years plus. They still get some fear, they still get anxious, they still worry, they still lack confidence, they still find drawdown painful. Of course they do, because who wouldn't? It is painful. But what they have learned over the years is how to manage it. So we have to accept this is part of the normal trading experience, part of what I would call the trading condition. There's ups and downs in life, that's a human condition. There's ups and downs in trading, a lot of them, that's the trading condition. You can't change it, and actually trying to hope it goes away is unhelpful, because it isn't going to go away. There's a good analogy, a guy called John Kabat-Zinn, who's a mindfulness meditation practitioner, has this great metaphor about that you can't stop the waves, but you can learn to surf them. And that's exactly how I think about the trading experience. You can't stop the emotions. You can't turn them off. You can't turn off the thoughts. It's not how we're wired. They come. For some people stronger, for others weaker, for some more often, for some less. But it happens. But you can learn how to manage those thoughts, how to manage those emotions, how to manage the urges, how to manage the memories, the images that all pop up. You can learn to manage that such that it doesn't get in the way of us taking the action we need to take. Time for a little experiment. Everyone put your hand in the air. Okay, I'm going to demonstrate the experiment, then you can do it for yourself. Now, are you all good? Okay. So, just watch, and then you can have a go yourself. Listen to what I'm saying, and watch what I do. Keep your hand up, keep your hand up, keep your hand up, keep your hand up. Have a go. Okay, watch again. Keep your hand up, keep your hand up, keep your hand up, keep your hand up. No wonder Tom's tired teaching you lot all the time. Watch again. Okay. Keep your hand up, keep your hand up, keep your hand up, keep your hand up. There's 2 things we're doing, yeah? I'm keeping it simple. There's 2 tasks. One is verbal, one is physical action. One is this, and one is this. Keep your hand up, keep your hand up, keep your hand up. Put them both together. Keep your hand up, keep your hand up, keep your hand up, keep your hand up. Okay, good. Next level. Advanced. Watch. Keep your hand down, keep your hand down, keep your hand down, keep your hand down. Have a go. Okay, great. So, here's what's interesting. I hear from people quite often, I had the thought, and let's say, for example, maybe it's, I can't afford to take a loss on this trade, and so I stayed in the trade. I had the thought that told me basically I can't take the loss on the trade, and that thought made me stay in the trade. Or I might hear, I had a really strong feeling of FOMO, so I got into the market, even though I knew it wasn't the right time to get in. But I felt it, and I acted on the feeling. I thought it, and it made me act in a certain way. And this has been a misconception from cognitive psychology, where we see diagrams such as thought leads to action or thought, feeling, action, and we think that's how it is. It isn't like that at all. Because if that was true, how could you do this? Keep my hand up, keep my hand up, keep my hand up, keep my hand up. Wouldn't be possible. But that's opposing action to thought. And we need to remember this, because just because you're having the thought that you can't afford to take a loss on a trade, it doesn't mean you have to stay in the trade. You could have the thought that I can't afford or I don't want to lose on this trade, and at the same time, you could get out of the trade. You can have the feeling of the fear of missing out. It doesn't mean you have to jump into the market. You can have the feeling of the fear of missing out and stay out of the market, providing you've got the psychological skills to be able to do so, of course. Yeah, and that's what I want to try and give you a bit of today. So this is really important. It's a key part of my work, because I think a lot of trading situations happen where if you're going to maximize returns and you want to be consistent, for many people it's the thoughts and emotions that are showing up that are influencing too strongly the behavior, and the thoughts and feelings that show up might be perfectly normal. This year's been tough for a lot of my clients. Early part of the year, particularly first 6 months, 7 months, a lot of hedge funds in drawdowns, some significant ones. Choppy markets, difficult. Lots of thoughts, lots of doubts, lots of worries showing up, minds going crazy. But each day you've got to still come in and do the right things, even though you're in drawdown, even though it's uncomfortable, even though you're doubting yourself, you've still got to come in and do what you need to do, execute the process. Yeah. So consistency of behavior, of what the visible behavior, is often having to occur, even though there might be internal thoughts and feelings that might be trying to sway us away from that. Yeah. So this is where we need our psychological skills. So I want to break it into 3 core component pieces. It's more nuanced than this, but Tom has given me an hour, which is pretty decent. So here are the 3 skills. We'll talk through them, and we'll actually do some of the skills as we go through. You may be doing some of these things already. If so, great. You can obviously just use them as a reminder. Some things may be new. Some things might be very new, things that you've never done before or considered, and you can always think about going away and trying them out. Okay? So the first component of being psychologically flexible is actually commitment. So here's a question for you before I explain more. I want you to think about the type of trader that you want to be. And I ask this to all of my clients. Tell me about the type of trader or the type of portfolio manager or analyst that you want to be, or that you are trying to be. Just in your mind, think about, how are you trying to be? Think about some of the qualities you might be wanting to demonstrate. So for one of my clients, phenomenal trader, young guy, probably late 20s now. When we did this exercise, he said, okay, it's really important for me to be focused. Okay, great. Focused as a trader. Then he said, I want to have a word that's kind of learning based. In the end, he came for kind of being he chose mastery. This kind of sense of kind of learning, continual improvement, keeping going. That was another one he chose. He said, I want to choose calm. So choose whichever ones you want. It's how do you want to be as a trader? And then he said, aggressive, in brackets, when needed. close brackets. Contextual, not aggressive all the time, but when I need to be aggressive, be aggressive. But that's important how he wants to be, okay? So that's, in his mind, we're creating, here's how you want to be, here's the qualities that you want to bring. And then you need to be connected to that, either daily or weekly based on your time frames. But we need to keep that in mind. Who am I trying to be? What are the qualities I want to demonstrate? Because when it's difficult, when we get to part 3, when we get down to being willing to be uncomfortable, for what? If we want our mind and body to be uncomfortable, the first thing they will ask us in return is, why? Because the psychological default in the brain around comfort, discomfort is comfort first, discomfort where required. So if you don't know why you want to be uncomfortable, if you've not got a sense of purpose, a goal, purpose, the trader you want to be, there's no commitment to anything, then there's no purpose, then the brain will be resistant to you being uncomfortable. So we have to balance, at least balance discomfort with some sense of purpose. And I say, in my model, we tend to look at kind of how that trader wants to be. They find it a nice way of thinking about things. So think about that for yourself. How do you want to be? And you might have some themes that are consistent, and you might have some where you want to be certain ways in certain different conditions. Aggressive, in brackets, where required, when needed. It's like rooms in a house. Some rooms we use regularly, some rooms in a house we go to when we need to, but less frequently. Yeah? That's how we can think about these qualities. Now, what I want you to do is, if you've done that exercise just quickly in your mind, you've maybe got a few ideas about how you want to be. Think about one of those. So if I take from my client, we might take his idea, let's take the mastery idea, being masterful. It's okay doing the first part and knowing how you want to be, but there's no value alone to that until you do the second part, which is, and what does it look like in practice? And this is where we start to add into our trading process. So for my client, his quality of being masterful, what does that look like for him? Well, A, he has coaching every single month. We check in via email every single week, sometimes twice a week. We're always talking about trading, about performance, looking for ways to improve. He asks me regularly what I'm reading so he can read as well. He does online training courses, even though he's already phenomenally successful. He mentors other people, but much like Tom was saying, also for the joy of mentoring, but also that it keeps him accountable. Yeah. So he's doing a whole number of things that reflect that. Now, he does them consistently, not because he read them in a book, not because I told him, you must adopt the value of being masterful. He chose that. It's important to him. It's how he wants to be. And he's committed to being that way, and then he is more consistent with the behavior. He wanted to be more aggressive. He chose that. It's a way that he wanted to be, that he cared about, that mattered to him. He's made that choice. He's thought about when he needs to be aggressive, what it looks like, and he's committed to doing that in practice. And he's been very consistent. He's got clarity, not just about the trading process, how he wants to be while he's trading the process. Yeah? And that's powerful, because when you're in a difficult moment, you can return back down to, how do I need to be in this moment? How do I need to be today as a trader? What qualities am I going to bring? Second part, focus. 2 levels of focus. External and internal. So a little exercise we can do together. First of all, I want you to have a look around the room and find 3 things in the room that you have not noticed until this point in time. So 3 new things in the room. Okay. Now have a little listen. 3 sounds. Okay. Now, just tune in to your breathing for a moment and just bring in awareness. Just notice maybe just the speed or the rhythm of your breathing at the moment. In-breath versus out-breath. Take a moment now just to notice maybe what thoughts are in your mind. What am I thinking right now? Take a moment to notice just how you're feeling. Could be emotionally, could be physically. Okay. So, we did external awareness, seeing, hearing, and we brought some attention inwards. Yeah? And we want to have both. Both are trainable. Things like mindfulness, meditation training, awareness training, attention training, journaling. These are all processes that we can do that can train and rewire our level of focus. Why is it important? One, the first part, external awareness, is when you're sitting in front of your screens, that's external awareness. Your ability to recognize patterns, to see context, to recognize context changes is external awareness. The higher, the better. Okay? In that context, we also need to work out what's the effective action. And WIN is just what's important now. What's important now. So in any given moment, in this moment right now, for me as a presenter, there are some things that are really important and others that are completely irrelevant. And all I need to worry about is what's important now. And some experience, hopefully some element of skill and practice, allow me to determine what's important now. But I might still find thoughts and emotions showing up that I need to manage and bring my attention back to what's important now. And then the internal awareness is critical because if we're not aware of a thought we're having, how can we manage it? What will happen is you'll have that thought, you'll act on the thought, you'll do a behaviour which seems to be unhelpful, then you'll realise it's unhelpful, then you'll work backwards and go, oh, why did I do this? Oh, that's because the market was doing this and I had this thought and that's why I did it. And you might journal it or you might not. You might learn from it or you might not. But you're still going to be in the same situation in the future until the level of awareness increases. Or you have an emotion, and then you act out the emotion, and you do the behavior, you get the outcome of the behavior, and then you try and track back as to why it happened. What we want to develop is the ability to notice what's happening as it's happening. I'm noticing in my mind this thought that I'm having about I need to stay in this trade. I can't afford to lose on this trade. And that's a thought a client told me about in a coaching session about 3 months ago, which led to his biggest ever career loss. Because he got very attached to the thought that he could not afford to lose money on this trade. And in the coaching session, of course, it unveiled itself that the thought made him lose money. No. Thoughts never made a trader lose money. Feeling never made a trader lose money. Because thoughts and feelings don't press the mouse. That's an action. So thoughts and feelings can influence those actions, but the thought or the feeling itself does not take the action. And again, that's a really important distinction we need to be making if we're going to be trading consistently, because consistency is what's the visible behavior I'm seeing and doing. So I can't, when I look at your behavior, I see it. When you look at your behavior, also you're doing it. And the consistency of behavior that we want to get is the action behavior. Am I pressing the mouse, not pressing the mouse? When I press it, what am I pressing it for? That's the behavior. But in amongst all that, the thoughts and feelings that are showing up could be very variable. Like the weather. Some days happier, more positive. Other days darker, more grey, wet and miserable. That's how we work. Thoughts and feelings, very reactive to the market, to experience. Transient, coming and going. And in amongst all that, that's inconsistent. Not a lot we can do about it happening to us. The behavior piece is where we've got more controllability. If we can kind of unplug from that. So we need this awareness, this internal awareness. The metaphor I often use is a river. Think about the river as your experience. When the river is calm, it's nice. You float along, all is good. And then we get into the rapids. Then we move into the grade 3, 4, 5 rapids. Now, all you're doing now is struggling to keep your head above water and not drown. Can't admire the view. You can't even make good choices. You're literally just trying to survive. But imagine if you were in a helicopter above the river. The river can be calm, you can enjoy the calmness, you can enjoy the view. The river can be grade 5 rapids, you can be looking down at the grade 5 rapids, you can see it's pretty rough down there, but your perspective from here and ability to act, to respond is very different. And that difference between being in or out of the experience is an awareness. It's focusing, this internal ability to notice. I'm having a thought, I'm having a feeling. So there's lots of research in neuroscience that when we put our feelings into words or we label them, it reduces the impact. Naming and taming is the common phrase in the psychology literature. So when I'm able to notice the feeling I'm having, put it into words to identify the feeling, which we often think actually will make it worse, it doesn't, actually reduces the emotional hold over us. The goal in trading is not to get rid of emotions. The goal in trading is to maximize market returns. But to do that, we might need to be able to learn to have the emotions, but without those emotions having us. I can have the fear of missing out, I can have the fear of loss, I can have the fear of leaving money on the table, and I can still take the effective action if I'm sufficiently skilled. I can have doubts, worries, anxieties, I can have my ego screaming at me. I don't have to act on it if I've got the psychological skills to be able to not act on it. So the awareness is key. So we need some commitment, we need some awareness, and then we need, most importantly, to be willing to be uncomfortable. Quick exercise. Just everyone stand yourselves up for a minute. Little exercise. Slightly more challenging than the last one, so just prepare yourselves for it. If you've got any knee injuries or back injuries, then please be cautious. Or any other kind of injuries, you all look like sensible grown-ups, so just manage yourselves as you need to. So here's a little challenge. I want you to get into a little squatting position. You can go as far down or you can stay as high up as you want to go. Just so you know it's going to maybe be a little bit uncomfortable. Okay? It's not a competition. Some of you think it is, but it's not. You can see a few of you settling into your gym squat positions. Okay? So all we're doing, okay, by adopting this squat, at some point, we all know if we hold it for long enough, it's going to get uncomfortable. Okay? And then we're going to have some choices. So we can all start to make some choices about whether maybe I might adjust my position, or maybe I just give up, or maybe I go, no, actually, I'm going to just be with this for a little bit longer. How far can I go? Neither's right or wrong, by the way. These are just different choices we've got in the moment. And then I might say, actually, well, the person that holds this squat the longest gets £500. And I did say, I might say that, yeah? I might say that.
Bring it on.
It's hypothetical. Exactly. Now we're thinking, oh, actually, well, for £500, maybe it's worthwhile suffering a bit more pain. And then we might get to that. A few of you might drop out, and a few might stay. And I go, actually, well, let's up the stakes. Let's make it 2,000. Then people go, do you know what? Actually, yeah, for 2,000, I'll take a lot more pain. Yeah? Okay, so we're balancing, aren't we? How much discomfort for what reason? To take part in, one of Steve's crazy exercises I don't really understand, or for 500 quid, or for 2,000, or whatever it might be. So we're starting to we're thinking about, okay, for what am I willing to be uncomfortable for? And how uncomfortable am I willing to be for how long for? Okay, thank you very much. Thanks for your participation, much appreciated. Well, you can go for as long as you like. Yeah, just take your chair away. But this is really important, because when you choose to engage with the market as newer traders, we often don't appreciate we're also contracting unconsciously to put ourselves into situations of discomfort. If you choose to run a marathon, we expect it to be uncomfortable. The training is going to be uncomfortable. The event can be uncomfortable. Trading is the same. People that run marathons, they make that choice. Probably because they've either got a goal they want to achieve, they're raising money for charity, there's some purpose, some sense that makes the comfort worthwhile. But it will be uncomfortable. So we need to appreciate the fact that we need to be open to that discomfort. Because if we're not open to it, what happens is we become aversive to it. If I think discomfort is negative, if I see it as being bad, anything we label as bad, bad emotions, bad thoughts, negative emotions, negative thoughts, discomfort, negative, bad. If we label anything bad or negative, guess what we try to do? Avoid it. And then I do the behaviours of avoidance, of discomfort, holding my winning trades for longer to avoid the discomfort of taking a loss, getting out of my winning trades early to avoid the discomfort of the market maybe reversing, or to get instant gratification. And then the behaviours I do to avoid the discomfort are the ones that actually reduce my market returns. So am I willing to be uncomfortable but profitable? Or am I playing for comfort but acknowledging I'm going to be less profitable? That's the choice. So one thing we can do at the start of the trading day or the start of the week as a strategy, and I have many clients doing this, is we actually remind ourselves of the discomfort we might be facing that day or that week, and that we are willing and open to accept that discomfort. And there might be particular thoughts or emotions that we know might show up in that day, in that trading session. But we just remind ourselves it's part of the process and we're willing to be uncomfortable. And again, this is where we can then also think about if we have our thoughts that are difficult, we can unhook from those thoughts. Just remind ourselves, these are thoughts I'm having. I don't have to act on them. Third person. Oh, Steve's thinking he can't get out of this trade because he needs to make money. Okay, well, Steve's thinking that. Doesn't mean Steve's got to act on that. Steve's thinking he can't afford to miss this next move in the market. This is the big one. Okay, well, Steve's thinking that. Doesn't mean Steve's got to dive in the market right now. So once we start to think about our thoughts as what they are, which is thoughts, we get some distance. Once we start to notice feelings as feelings, oh, okay, I'm feeling some FOMO here. Okay. But I'm just having the feeling of FOMO. Do I need to act on it? Maybe I do, maybe I don't. This is the next point. Function, data. When we have thoughts and emotions, they have a function. They're there for a reason. Do I need to act on it? If I've got some fear showing up, maybe I've detected something in the market that I might need to act on. It might be worthwhile acting on that, but not always. But we can assess, is there some function? The word we use in my world is emotions as data. Yeah, emotions as data. And I like that because if emotions are data, there's no need to get rid of them. When you collect data, like Tom's doing his analysis earlier, made it very clear that he hasn't taken bits out to make it look better. He's not selected the best bits to impress you. He's giving you the whole lot. And that's how emotions are. We can't kind of just pick the emotions we want to have. It doesn't work that way. Yeah? Emotions are data. Risk. The emotion of risk is fear. The emotion that relates to reward and opportunity is excitement. These are primary core emotions deep in our biology. Can't get rid of them. But we can be aware of them. We can think about, are they telling me anything of interest? Do I need to act on them? Or I can just have the emotion and take action as is required. And I want to put into sort of, I guess, all of that into a relatively usable framework, such that if you were in a moment where you needed to, maybe there was a situation where you might not follow through with your trading plan, or you could follow through, this might be a technique we could use. So in a situation where you know maybe it's going to be uncomfortable or difficult, there are 3 core steps that I teach my clients, and this is literally as easy as ABC, obviously. So first of all, we could acknowledge this is a tricky situation. This is challenging. Just acknowledge sometimes this is hard. Drawdown is hard. We don't have to deny it. Drawdown is difficult. Sometimes pulling the trigger after a series of losing trades is difficult. We might acknowledge a particular thought we're having. We might acknowledge a particular emotion we're feeling. But we can just acknowledge what's going on. It could be external, could be internal, could be both, depending on the time frame, how long we've got. But what we do in that first step is we get the shift from here to here. We might, at this stage, if we've got time, take a breath, or 2, or 3, or 4. Because if the emotions and the physiology is all increasing, if we're getting that stress response going, as it builds in the body, it wants an outlet. And that's why we get reactive and impulsive. It's a dispelling of energy in our physiology. So we could take a breath or 2. Just a slightly longer, slightly slower, slightly deeper breath. Put the brakes on. And then we can choose now how we want to respond in that situation. The question could be as easy as, how do I want to be in this moment? Or it could be, what's the effective action to take in this moment? What do I need to do right now? Or it could be, what would my best trading self do in this moment? It could even be, what would a role model do in this situation? And we're just getting into what's the effective response, but we can be more responsive here because we've done the acknowledging and the breathing. If we try and take action before we get to this A up here, this is where we are likely to be more reactive. Stuff's going on and we react to it. Or we can acknowledge what's going on, external, internal, take a breath or 2 or 3 or 4, and then we can choose from here how we might want to respond. Okay. All of you, and this is thanks to Tom, by the way, this is an early Christmas present from Tom for you. I've got a Trader's Mind journal. That's a great example of doing the work, by the way, and the reason we put that journal together is because lots of my pro clients asked me about how to journal, how do we structure it, what goes in it, so it's kind of a bit like a blueprint. It's not the perfect journal, there's no such thing, unless an individual designs it for themselves, but you've all got one. There's 3 months worth of journaling you can do in there. When I wrote that journal, I thought it would be pretty useful, but I genuinely been surprised by the people that have done that for 3 months diligently, the amount of feedback that I've received from people, how much it's changed them and their trading is phenomenal. But what, again, it's a reflection of is journaling is an active process of training your psychology, increasing awareness, reflecting, gaining insights, thinking about how to set actions. It asks you about how you want to be each day. It asks you to think about how you have been. It asks you how well have you traded, not how much money did you make, how well did you trade? How have you been this week? What will you do differently next week? What challenges are you going to face? How are you going to cope with those challenges? So it's an active process of actually training your psychology through that process. So my invitation to all of you is give it a go. Yeah, it won't be for everybody, but for those of you that work your way through it and do the 3 months, I think it'd be worthwhile. And the only reason it's on here at the moment, you've got a free one, but if you liked it and you wanted another one for yourself or for a friend or whatever, they're half price at the moment if you wanted one. So feel free. And then Bulletproof Trader, which is my last book I wrote, again, Harriman House are doing a special Christmas offer, so you can have that a bit cheaper if you want it as well. Slides I will send to Tom, so you can have the slides for free as well. So I know some of you are writing notes, which is great, but you can have the slides as well. Other than that, thanks for your attention. Hopefully some things to think about, some things to go away and do. I'll hand over to Tom. I think you've got another 732 slides to go.
I was sitting in the back, and I was here, and okay, so